Hi guys, Will here from WB Trading, and in this video we're going to help you to understand the different types of markets that are out there and available to trade. So if you're a new or even an intermediate trader, this is going to really help and add a lot of value for you. You'll also want to stay right until the end today so that you don't miss any of the info that we share, because this is going to be an important one to say the least. Stay tuned and let's get into it. Hi guys, Will here from WB Trading and welcome back. If you are new to the channel, please do hit that subscribe button and tap the bell icon so that you don't miss any of the free content that we share with the trading community here on YouTube. And before we dive in today, I'd like to just say thank you as always to our content writer, Asri, for actually putting this idea on paper here. He's been coming up with some really fantastic video ideas to help you all recently, and we hope that you're enjoying the YouTube content as much as we're enjoying creating it for you too. In fact, on this subject, pause the video for just a quick second if you would, and let us know in the comments section below what kind of video content or video subjects would help you the most. What would you like to see here on the channel? Let us know and we'll make a note of your suggestions and we will get to work for you. After all, this channel is here to help you, so we're all ears when it comes to knowing what you'd like to see. Right, let's dive in. So in today's video, again, we'll be covering a very important aspect of trading, that being understanding the various products or asset classes, also known as markets, that are available for you to trade. Okay. When it comes to trading, one popular first question to ask when you meet a trader is which products or which markets do you trade and why, right? There are so many out there, from currency markets to stock indexes, which are a favorite of mine to trade using our price reversion strategy, through to stocks, bonds, and so on and so forth. And in this video, our aim is to educate you on some of the most important of these, along with helping you to understand how we can make money trading or investing in them. So firstly, we have stocks and shares. So stocks and shares are issued by companies that are listed on stock exchanges. The most popular stocks at this current moment, in my opinion, being the likes of Apple, Tesla, Google, and so on, which are listed on the New York Stock Exchange over in the United States. In the United Kingdom, companies like, let's say, Vodafone, Barclays are popular, while in Australia, companies like BHP Group, Rio Tinto tend to take the cake. When we buy stocks, we essentially buy an ownership in the company, okay, on either a short-term or a long-term basis, depending on the strategy that you're actually using. The obvious benefit to buying shares is that the shares can rise in value over time and we can then sell them, booking in again. The other benefit is that shares can actually pay us dividends too. So not only can you bank a winning trade, you actually get paid just for being in the trade too, which is it's pretty cool, right? Let me explain how this works. When the company makes profits, they in many cases choose to distribute a portion of the profits to their shareholders, which, if you bought the stock and are currently in a position, means that you receive some of that profit. On the flip side, the risks are, of course, that the share price can fall, which means there could potentially be a capital loss for us when we then later sell those shares. In the worst case scenario, we could actually lose everything if the company goes into bankruptcy, like what happened during the 2008 financial crisis, when Lehman Brothers, for example, did in fact go into liquidation. The shareholders in that case did unfortunately lose everything. That is why trading with a statistical edge is, well, it's critical, because without an edge, you're as good as risking your hard-earned money by just guessing, which is why we trade mechanical strategies using strict rules built around statistical proof, to actually make sure that the trades that we're taking are accurate and will generate profits over the long term. Secondly, we have stock indices or stock indexes, as they're otherwise known. And an example of a stock index would be the DAX. So the DAX is a German stock index in which the top 30 blue chip German stocks are bundled together into one tradable market price. Let's say that a large German company is hit with bad news tomorrow. Okay, this might bring the price of the DAX index down because one of the stocks inside it that actually makes it up has taken some kind of hit. Okay, now that's how it works. And again, having a strategy in place to apply to these markets is critical. And I actually built our price aversion strategy for use on this market specifically initially, along with other stock indexes. Many DAX constituents are large multinational companies with global operations all around the world, such as Deutsche Bank, Volkswagen, BMW, Adidas, and similar to stocks, an index can of course rise in value over time and can also fall in value over time. The risk for the index though to actually fall to zero, it's a pretty small one because the index is made up of 30 very high value blue chip companies, and dare I say it, it would be almost impossible for all 30 blue chip companies to go into bankruptcy at the same time. And if that did happen, it would be a pretty worrying time, wouldn't it? We can also gain exposure to a stock index over time by investing in an index fund. And here at WB Trading, we do actively encourage investments in index funds due to their safety, due to their long-term slow and steady nature, and so on and so forth. In fact, a really great video on this topic of index funds is actually already here on the channel, entitled What is an Index Fund? Next, let's talk about the foreign currency markets. Okay, now the foreign currency markets, also referred to as Forex or FX, is by far the largest financial market, well, series of financial markets in the world. So according to the Bank of International Settlements, BIS, trading in Forex averages $6.6 trillion in trading volume per day. It'll also be helpful to let you know the three most liquid trading pairs in the world, those being the euro-dollar pair, the dollar-yen pair, and the pound-dollar pair. Now, one of the benefits of trading in the Forex markets is that they're open 24 hours a day, allowing us to trade any time of the day or the night, which means there's pretty much limitless opportunities for traders all around the world, regardless of their time zone. And by trading our strategies using our mechanical rules as one example, you'd have the opportunity to pull money out of the markets right around the clock, no matter your location or your time zone. Which brings me on to another subject. See, due to the size of the Forex markets, you'll find yourself competing against the big boys. In this case, the central banks, the investment banks, the hedge funds, and other professional Forex traders. And without knowledge, without a statistically proven edge, without proper risk management, there's just absolutely no doubt that a retail trader will fail, unfortunately. And here at WB Trading, our aim is to properly educate retail traders and literally provide them with professionally built, ready to trade strategy rules that provide that edge over the market that is needed. And we also teach risk management in detail to equip new and struggling traders before they dive in and begin trading, meaning they're ready to make money from the off from day one. And we believe that knowledge is power. Hence, we advocate traders to equip themselves with knowledge and never just go in blind, so to speak, as you will no doubt lose your money to the traders out there like ourselves who are trading with edge. Next, let's also cover the commodities markets. So a common commodity that people trade is of course gold. Gold is seen as a safe haven because it's acted as a store of value, maintaining its purchase power for, well, thousands of years. Now, history has proved that over time, the value of gold remains constant, whilst the prices of everything else tend to go up in line with inflation. Of course, gold typically performs really well during, let's say, a market turndown or a financial crisis, and as such, gold is a very useful asset class that offers superior diversification to an investor's portfolio, helping to withstand volatility over the long term. Finally, and I'm sure you'll agree with me here, but it would be an injustice for us to leave out the most recently popular asset class, cryptocurrencies, right? One example being Bitcoin. Now, Bitcoin was first invented in 2008, I believe, by a person called Satoshi Nakamoto. And if you don't already know what it is, it's a decentralized digital currency with no central bank in the world responsible for actually administering the currency. Nowadays, Bitcoin is accepted as a payments method, allowing people to pay for services or goods using them. And throughout the last year or so, the Bitcoin price has actually increased, well, remarkably, currently trading at just above $62,000 per coin as of me making this video. But Bitcoin isn't the only cryptocurrency out there. Investors can also buy other cryptocurrencies that could potentially be, well, the next Bitcoin, so to speak. And there are cheaper alternatives, such as Dogecoin or Litecoin, as two examples. Importantly, investing in cryptocurrencies can also aid what's called portfolio diversification, meaning you're not just trading one single market or one single sector, which often sets professional traders aside from others. Right, so that's all for today, and we really hope this video gave you some perspective on the functions of the different asset classes out there, along with how they can help to grow your wealth by both allocating funds to and allowing you to trade in, well, various areas of the financial markets, with the ultimate aim of achieving, again, portfolio diversification. Similar to trading, investing is all about withstanding the test of time and thinking long term. And only the best, only those with a proven edge over the markets survive. And if you aren't yet trading with edge, and that's leading to the fear, the frustration, don't worry, we can help if you'd like us to. Head over to our website and you'll find more info on how we can help over there. Just click the link in the description and we'll see you over there later on. Anyway, we hope that helps. And if you did enjoy the video, again, please let us know in the comments section below. We'd love to hear from you all, and your feedback would be appreciated. That's for sure. We hope that's added value for you. And from me and the team here at WB Trading, trade with edge, with consistency, and we look forward to having you back here on the channel soon. Thanks, guys.